So I'm always looking to try something new here on Popcorn Finance, and I've always wanted to add a segment where I say thank you to you, the listeners, just to give you a shout out. And I've done it in the past, but I wanted something a little more formal. So I want to add this new really quick segment to the very beginning of shows called a kernel. And this is just a quick shout out, or a kernel, as I'll be calling it, to one listener, just to say thank you for joining me here each week. And so today's kernel goes to Shay Love, and she is the, as I'm calling it, the doctor of tiny home research for me on Instagram during Tiny House Tuesdays. So Shay, thanks so much for listening to the show. I appreciate your support, and I hope you all enjoy today's episode. Hey, this is Chris. Hope you're doing well, and welcome to Popcorn Finance, the show where we discuss finance and about the time it takes to make a bag of popcorn. Today we are popping back into our Investing 101 series, and this has been a series that I've been building off and on over the past couple of years. And for those of you who haven't caught any of those episodes yet, think of this as taking a finance course, but in bite-sized, small little pieces here, one kernel at a time. And in each episode in the series, it is meant to just build upon each other. So that way, over time, we'll be able to teach you the fundamentals of investing. And so far, we've covered stocks, bonds, what a stock market index is, just to name a few of these items. And so my goal is that at the end of the series, you'll feel more confident with the topic of investing. And because you feel more confident, you'll be able to go out there, ask the right questions, and take charge of your retirement. And today, I am joined once again by the editor-in-chief of Investopedia.com, Caleb Silver. Caleb, how are you doing today?
I'm great. It's always good to be back on Popcorn Finance. Thanks for having me, Chris.
Appreciate it. I'm happy to have you here. Wealth of knowledge. You've actually been part of this Investing 101 series a couple of times. We talked about mutual funds and ETFs in the past. I really appreciate you hopping in and covering some topics that have been considered very confusing by many people. And I want to bring you on to discuss another topic that I think causes some confusion out there, and that is money market accounts. But before we do, I wanted to say thank you to Empower for bringing you all today's bag of popcorn. Empower is an app that makes saving and managing your money easy, and they can help you reach your savings goal even faster. You can tell Empower what your weekly savings target is, and each day Empower will study your income and spending, and then they automatically know when to move the right amount of money into your savings account. And you can pair this with their checking and savings accounts, which offer 1.6% APY with unlimited withdrawals and no minimums. You can check out Empower, that's EMPOWER, in the App Store or the Play Store. And as a special offer for Popcorn Finance listeners, you can get $5 when you use offer code POPCORN and reach your savings goal. You can visit empower.me/popcorn for more details. Again, that's empower.me/popcorn. All right, so Caleb, money market accounts. It kind of sounds like a bank account. Kind of sounds like it has something to do with the stock market. What is this exactly?
Okay, so you've probably seen advertisements for money market accounts every time you go into the bank. And a money market account, it's essentially a hybrid between a checking account and a savings account. You can write checks out of it. You can make some debit purchases. It earns a higher interest rate typically than a savings account, but there are some limits to what you can do with it. And generally, you need to keep a higher balance, and there is a limit to how many checks you can write a month.
Okay, so it's like it's a hybrid checking savings account. Where does this kind of fit into someone's finances?
If you are looking to have a sort of a safer place to put your money, or you can put your money away for a defined period of time, say if you have an emergency fund, or you want to put money away for a tax payment down the road in a few months, or you're saving for a vacation, you'll typically get a higher yield, higher interest rates off money market accounts, but it doesn't have all the flexibility of a checking account. So think of it as a savings account that has some of those checking aspects to it, but it does earn a higher rate with some limitations. But typically for that money you want to set aside for a defined period of time, usually longer than a few months, but not as long as, say, 3 or 4 years.
Got it. Okay. And then these accounts, they typically require larger sums, right? They're not going to let you come open it up with maybe $100 or something like that.
No, you're right about that. They usually require bigger deposits to start an account because they are like savings accounts in that regard. So the minimum is much higher than obviously a checking account, which there is almost no minimum. But for some, the minimums could be as high as $10,000. Some are cheaper than that, but they do earn a little bit higher interest for you. It does take more to get it started.
Okay. What type of person do you see typically deciding to go with the money market account, or where do you see people implementing this in the things they do?
People who are, like I said, who are saving for something defined, they know they're going to need a chunk of money in a certain period of time, and they have a certain chunk of money in the bank, but they want to do better than put it in a savings account where the interest rates are typically very low. Money market accounts, the interest rates aren't that high, but they are higher than savings accounts, so they earn better interest. But like I said, if you have something that's out a year or a 2-year horizon, and you don't want to put it in the stock market, a money market account can give you a better return on your money, and it's safer. It's guaranteed by the bank.
Okay. I'm going to try to explain this because it always helps me to just kind of reiterate it again. So
Sure.
if I'm someone who wants to put aside a good chunk of money for a future goal I have out there, a money market account would give me a higher interest rate, but maybe give me more flexibility than like a CD where you can't really add or take away from once it's opened.
Sure. So if you put money into a CD, you have to keep the money in the CD, the certificate of deposit, for the defined period of time. And that could be 6 months, that could be a year, that could be 2 years. It depends what you're buying from the bank, what CD product you're buying from the bank. If you take it out of a CD, you get penalized. A money market account isn't like that. It's much more like your checking or your savings account. You can take it out at will. Well, you are limited to 6 transactions that could be transfers, withdrawals, or deposits per month. So you can't use it like a checking account and use it anytime you want. You get 6 transactions over a 4-week period, and you get penalized if you go above that. So you can't treat it like you normally would your debit card, but you can treat it like this hybrid between the checking account and savings account that it is.
Got it. So it's similar to a traditional savings account with that 6 transaction limit.
Exactly, in the 6 transaction limit. And that's the point. You want to keep that money in there for a long period of time because it is earning that higher interest than a typical savings account, but you can't go in and out of that account as frequently as you would with a checking account.
Got it. Okay. That makes perfect sense. All right. I think I have a good mental image here of where this would fit in somewhere within my finances. So thank you, Caleb. I really appreciate this explanation. And again, making something that has to me, a confusing name, like money market account. I'm not quite sure what they're talking about here. You've kind of brought it down to, I think, terms that anyone can remember and hold on to here. Before we go, to give you a chance to let people know what's going on over at investopedia.com and, what can people look for when they come and check out your site?
Well, investopedia.com is now 20 plus years old. So we are a dinosaur in the internet age, but we feel young. We feel like a teenager. So we've been brushing up our site, updating all of our financial terms and definitions and how-tos. And now we're helping people do research on things like credit cards, on bank accounts, on online brokers, helping people find the right financial products for themselves so they can decide how they want to use that in their life. If they're looking for a credit card with some particular amount of rewards, or if they're looking to start investing through an online broker, we're doing reviews of those to help people find the right products for themselves.
Oh, no, that's great. I'll definitely put a link to investopedia.com in the show notes. I use this site so many times in college. I still use it to this day when I'm like, what is a money market account again? I'll head over to investopedia.com. So thank you so much, Caleb. Really appreciate your time and you taking some time to tackle this topic with me.
My pleasure, Chris. Always happy to be here.
Your boy keep it poppin' like Mary Poppins.